How did altcoins get wiped out overnight? Anatomy of the deep crash. This video is not investment advice. Its goal is to remove speculation and use real data to explain last night's historic crash. As in our previous episode, we ask again, what's real and what's just hype? Within just a few hours, some altcoins literally went to zero. Stablecoins lost their pegs, exchanges froze liquidity, and the crypto market experienced chaos rivaling the 2020 pandemic crash. So what really happened? Who was behind it? And how far did the major coins like XRP, ADA, and Solana fall? Let's look at the evidence step by step. 1. What happened? Last night, just after former President Donald Trump announced 100% tariffs on China, the crypto market went dark. The S&P 500 dropped 2.7% during the trading day, erasing roughly $1.5 trillion from global stock valuations. Analysts called it the largest single-day liquidation in history, over $20 billion in leveraged crypto positions wiped out overnight. Bitcoin dropped from around $122,000 to $104,500 in less than 24 hours, but that was just the beginning. Altcoins bled far more. Total altcoin market capitalization hit a new cycle low, and some coins fell by 80 to 90% within hours. 2. Altcoins going to zero. The most shocking part was that some altcoins on major exchanges briefly went to zero. IOTEX, IOTX, and Cosmos, ATOM, both momentarily hit zero USDT, something almost never seen before in live markets. Reports confirmed that over 40 altcoins lost more than 90% of their value in a single night. BitMEX co-founder Arthur Hayes said the event was caused by automatic liquidation of collateral linked to cross-margin accounts on large centralized exchanges. He even joked, "Congratulations to those who bought the dip. You probably won't see these levels again for years." 3. What sparked the panic? So, how did this chain reaction begin? While most traders immediately blamed Trump's tariff announcement, the severity of the crash went beyond what any macro headline could cause. Analysts now point to a perfect storm of triggers. Tariff shock. Trump's aggressive trade war stance spooked institutional traders into selling risk assets. Crypto was first on the chopping block. Cross-margin liquidations. Automatic margin calls cascaded across exchanges, wiping out small caps first, then mid caps. Liquidity gaps. One major exchange saw its internal stablecoin fall to 60 cents, while others stayed near $1, proving liquidity wasn't uniform. Market maker collapse. A few big market-making firms reportedly ran out of liquidity buffers, leaving smaller tokens unprotected as bots started panic selling. In short, it wasn't one event. It was a domino effect that fed on itself. 4. The liquidity chain reaction. Data showed that exchanges' futures insurance funds burned through hundreds of millions in just hours to stabilize order books. But the panic was too fast. Within minutes, bids disappeared. Red candles dominated every chart. Trading bots accelerated the meltdown. Every forced liquidation caused more selling, which triggered even more liquidations. Stablecoins like USDE and wrap tokens such as WBETH lost their pegs, doubling effective leverage ratios and amplifying the collapse. It was a perfect display of how liquidity, leverage, and fear interact to form a financial black hole. 5. What happened to the majors? Even top coins weren't spared. Bitcoin fell from about $122,000 to $105,000, Ethereum dropped 12%, Binance Coin about 10%, and XRP fell from $2.83 to $1.89, a 13% slide. Cardano, ADA, saw perhaps the most dramatic move, from 85 cents down to 30 cents, losing nearly 65% of its value in one session. Whale wallets dumped tens of millions of ADA over the week, compounding retail panic. Even Solana, which held firm during previous dips, crashed over 15% in hours. The message was clear: in liquidity shocks, altcoins take the hardest hit. 6. Oracles, depegs, and exchange mechanisms. It wasn't just the prices that failed, the infrastructure itself cracked. Some centralized price oracles malfunctioned, sending false values to DeFi platforms and triggering unnecessary liquidations. Stablecoins like USDE, BNSOL, and WBETH depegged dramatically. USDE fell to 65 cents, BNSOL to $35, WBETH to $430. Meanwhile, analysts noted a likely bug in one major exchange's market-making algorithm, explaining why even gold-backed contracts dropped alongside altcoins. This points to a systemic weakness. Algorithmic market makers can fail catastrophically when too many assets are cross-linked through leverage. 7. Two possible paths forward. So where do we go from here? There are two main paths forward: normalization and recovery. Some analysts believe this is just a violent correction inside a broader bull market. Historically, such liquidations flush out over-leveraged traders and create a healthier foundation for future rallies. New shockwave. Others warn that the system's core vulnerabilities, unstable collateral, depegged stablecoins, and weak exchange safeguards, remain unresolved. If tariffs intensify or macro liquidity tightens, we could see a second wave of liquidations before true stabilization. We've seen similar setups before, from the 2018 bear market to the Terra and FTX collapses. Each time it looked like the end, but each time liquidity cycles and innovation revived the market. The question now is not if recovery happens, but how much damage remains before it starts. 8. Think like an operator. These events are a wake-up call. Don't follow hype, follow data. Here's what you should track weekly: exchange reserves, are exchange wallets losing stablecoin liquidity? Insurance fund spending, are protection funds being drained faster than replenished? Stablecoin depegs, even a minor deviation below $1 can signal leverage stress. Futures versus spot prices. If futures stay above spot for too long, it's a sign that short traders are preparing for another dump. Build your own simple dashboard using free on-chain data. It's the only way to see through manipulation headlines and panic-driven claims. And remember, markets don't reward emotion, they reward observation. Think like an operator, not a spectator. Conclusion. Last night's crash exposed both the immense potential and deep fragility of the crypto ecosystem. IOTX and Atom hitting zero, Cardano falling 65%, and major coins like XRP and ETH collapsing by double digits, all because of one geopolitical statement and flawed liquidity models. But even amid chaos, some institutions quietly accumulated positions, preparing for the next rally. As always, the strongest hands act when fear peaks. The lesson? Technology, politics, and psychology are now fully intertwined. A tweet, a tariff, or a misplaced Oracle update can move billions in minutes. The market is no longer just about coins, it's about systems, liquidity, and the humans behind the code. If you found this video insightful, hit like and subscribe. In our next episode, we'll break down how to track liquidity metrics in real time so that next time you see the crash coming before it happens. Because in this channel, hype doesn't speak, data does.